good afternoon to all of you, and thank you for joining us for this ONFIF HSBC virtual panel on the future of work, which will have a focus on the main issues affecting the financial services sector in Asia Pacific. This, of course, forms part of a series we've been rolling out of ours, which looks at the longer term implications for the world economy and financial markets post-COVID-19. My name is Adam Kocher, and I head up the Asia office of ONFIF here in Singapore. And we're very pleased to have a great lineup of speakers with us today. And given time is short, I will spare lengthy introductions. But we today have Aziz Durrani, Senior Financial Sector Specialist from the CSEN Center, joining us from KL. We have Melchor Labasan, Director of the Technology Risk and Innovation Supervision Department at the Banco Central in Filipinas. We have Laurence Thierry, Head of Financial Services APAC from Amazon Web Services, and Rajiv Tumala, Director of Digital and Data at HSBC. Now, to manage and have the best flow of conversation, we will begin with a panel discussion with the speakers. We anticipate this taking around 45 minutes altogether. We will then use the remaining time for Q&A with our attendees and those dialing in. During the Q&A, we, of course, warmly welcome participant interaction. So please do feel free to ask questions. And that's most easily done via the chat function, but you can also send them via email to one of my colleagues, and that's Angelia. And she can be emailed at angelia.lee@onfif.org. This is also a good time to remind you that this will be an on-the-record conversation, and that you can, of course, subscribe to receive our updates by going to onfif.org/subscribe. Now, COVID-19, the disruption from COVID-19 to the financial services sector has been very broad-based, but there's real observed impacts into changes in working patterns, operational resiliency, changes in customer behaviors, and of course also changes in partner and supplier dynamics. The phase of immediate action to ensure business continuity is now largely complete or underway, and we're seeing around the world restrictions gradually easing and then often coming back. And as the light starts to emerge at the end of the tunnel, financial services firms and also their regulators need to start planning for this next phase. There will, of course, be likely some permanent changes to working practices, the way customers do banking and other financial services. There's also, of course, going to be shifting expectations from stakeholders. And for working practices in particular, not only will we all be doing less traveling, which is, of course, going to be good for the environment, but more flexible work and travel arrangements will encourage greater participation in the workforce for parents with childcare responsibilities, those caring for family members who often have difficulty traveling into the office. And this ties into an issue of diversity, and I think it's fair to say there's been quite a lack of diversity in the financial sector in Asia, and that has been a long time issue that the industry has been grappling with. So having some permanent industry-wide flexible working arrangements could drastically increase the appeal of working in finance for those with families and other requirements, and thereby, of course, broadening the available talent pool. So I want to get the conversation underway, and I thought we could start with a bit of an icebreaker by asking each of you to provide some of the best and worst practices that you've discovered as part of the working from home arrangements over the last few months. I think Rajiv can speak from personal experience today on the different platforms, and maybe Rajiv, we can start with you on that.
Yeah, I think so. Let me start with the best practices. First of all, I'm sorry, my webcam seems to be malfunctioning today, so you can't see me. I am in the process of trying to fix it. So definitely, right, it adds a lot more flexibility to your schedule. I would basically say that this is the best possible integration of work and life. Only if certain things can be addressed, right? So, the commute is really short, maybe less than a minute for most of us to go in and, start working. But that also means that the work is always with you. It's almost, I would like to compare it with a Netflix binge watching, right? So there is no stop cue for work. So you could actually be working all the time. You also, I at least have figured out that I tended to put in a lot more hours. There's flexibility around it, so you sort of try and take breaks when you don't have a meeting or two. But I was talking to a colleague of mine, and I was telling that work from home can be brutally efficient. And what did I meant that if you are in the office and if you have a couple of back-to-back meetings, you at least change conference rooms, move from one room to another. There are some accidental, bumping into colleagues, checking in. That experience is there in the office environment, but work from home, while it is efficient, you can jump from meeting to meeting to meeting without like batting an eyelid. So you have to watch out for these things. At the same time, it gives you an opportunity to better integrate with your family. You don't have to travel. You tend to spend. I saw that I tend to spend a bit more time with the kids, trying to help out with their homework where possible. Of course, in Singapore, we've had home-based learning, so that's been an experience as well. Trying and managing that, I did not find that very easy, though I should admit. So there are best practices. Setting yourself up, probably 2 screens is better than one. So 2 24-inch screens are better than one 27-inch screen. Having a comfortable desk, investing in a good chair, all of these become a lot more necessary in terms of setting up space and watching out for those, because there are no natural cues to stop you from working, consciously trying to stop working at certain points in time. And of course, right, actively managing that work-life integration. I think that's another thing. That's I pass on to my next panelist.
Thanks, Rajiv. Now, maybe Lawrence, I'd like to bring you in here. Obviously, I may be wrong, but I always perceive that AWS offices would be the offices of the future. And you're probably hot desk and are used to such flexible working arrangements. But has it been a challenge for an organization like AWS as well?
Yeah, Adam, thanks a lot. So first of all, I'll say that Rajiv covered already a lot of dimension. But what I would tell you is at AWS, we're used to work in many different locations. So, in terms of having the ability for the entire staff to use a wide set of technologies to do, video conferencing and online meetings and chat room, as well as collaboration tools, is part of our everyday life. Now, obviously, what came with COVID is on top of it, it's every day, every single day. And so instead of being on a plane, like everybody else, I've been stranded at home, and I'm actually in my bedroom right now. So you can't see my bed, but essentially I can see my bed. And so, to Rajiv's point, I think that one of the biggest challenge is not so much the technology. The technology is out there. We have secure access to all of the applications that we need. We can reach out to our customers when we need and to our colleagues and so forth. But it's more about finding the right balance. And finding the right balance when it comes to work and life, because there is not so much delineation, but also making sure, to his point, that you just get up every so often. I had a couple of my team members that actually hurt their back just by staying seated for so long, and making sure you find your pace, because at AWS we have so much stuff we could be doing for our customers that we need to make sure we pace ourselves and we make sure we continue to take care of the well-being of all of our employees around the world. So it's more finding that right balance. But in terms of technology, let me tell you, it's working. It's working pretty well. And this is where we've been able to test, the kind of technologies I would say at scale and the availability in a very short amount of time as well.
Yes, no, certainly it does seem to be that case. And now, Mel, if I could bring you in quickly as well. I mean, from a central banking perspective, central banks are always seen as sort of bastions of stability. What kind of issues has you or yourself, but also your colleagues, faced from these working from home environment?
Yeah, thanks, Adam. It's a good thing that this pandemic has happened at a time when we are actively pushing for digital payments, when we are actively fostering responsible innovation. So most of the institutions, I'm talking right now as a supervisor. So most of the institutions that we supervise right now are really embarking on their digital transformation journey. So it's really just a matter of continuing or accelerating or stepping up their efforts to offer more digital financial services. But again, in terms of the challenge, I think um, when we speak about digital transformation and really navigating safely the new economy, it requires really a lot of reliance, as mentioned by Lauren, on technology, on digital solutions. And when we speak of technology and solution, it is always accompanied by increased exposure to cyber risk, right? So this innovation, this new economy would require robust cyber risk mitigation measures. So that there would be increased investments in terms of access and identity management, VPN, data leak protection, etc. But on the part of the central bank, as a central banker, I think large-scale adoption of remote work technologies and even digital innovation can support also effective performance of our mandate. Because right now, since we are work from home, most of us are working from home, so we really can't perform most of the routine on-site examination tasks, audit procedures. So we have to rely really on our off-site surveillance capability. So that has to be sharpened as well by using technology. Some good example. We recently, we are piloting right now our API-based prudential reporting system. There is a prototype chatbot right now that can easy, so that the interaction between the BSP and the financial consumers would be a lot easier. And soon we are also looking at the feasibility of using blockchain analysis solutions, etc. And we're also looking at right now uh, a unified RegTech and SupTech solution that will support end-to-end cyber oversight, supervision, cyber risk reporting, cyber threat assessment. So all of this will be supported by technology. So we can effectively perform our mandate regardless of our location.
Yes, well, a lot of this, of course, has propelled us to show more trust in technology as well. Of course, the central banks have to be very trustful of the technology they bring in, of course. Now, as is just finally, I suppose, obviously you work at a research and training institute. How has that been disrupting, or has been disrupted, sorry, by COVID-19?
Yeah, initially it was quite a big disruption because, as you can imagine, we do a lot of technical assistance and capacity building, and that usually involves going on site to the various central banks in the region and running these training programs and so on. And so it kind of completely flipped our business model, and none of us are experts in this, but we moved it all online. So we're now running the training programs via webinars and developing e-learning courses and so on. And it's quite interesting in just a few weeks initially, and now it's been a few months, obviously. We've managed to settle into that and adapt to that quite quickly. So it goes to show the technology is there. And also at the same time, a lot of our participants are also stuck in the house. So we have a bit more of a captive audience who have the time to kind of tune into a bit more than maybe they usually would have had. So I think there's some definite positives, but as the other speakers have mentioned, we always have to be careful of being always on and being able to take breaks and so on, and also keep motivated. I think a lot of the kind of informal conversations you have when you bump into colleagues, that's when a lot of new ideas and thoughts are generated. So that's something that I think still we're missing out on in being kind of a bit more secluded from home.
Yeah, thank you. I'm talking about business models. I want to go back to Rajiv and really ask, what are you seeing in terms of the digitalization of financial service organizations such as HSBC and its impact on business plans? Has the digital side of HSBC been propelled by the crisis?
Yeah. So what this specific crisis has brought to the forefront is the need to digitize, right? So earlier, the need to digitize was always there. If you go back, right, every organization has had digitization as part of their priority. No one actually saw that digitization as one thing that adds to resiliency to your operations, right? You know, a lot of digitization was client driven, giving better experience to clients, extracting some efficiencies because you were able to automate. But you know, operational resiliency was not one of the top 3, top 4 reasons. If you basically pot out, it was not one of the reasons why people thought you should digitize, right? There were always other things, you know, better client experience, you know, operational efficiencies to a large extent. But what this crisis has basically taught us is, you know, the resiliency of your entire business model goes up by a couple of notches if your business is better prepared to be able to operate. We've always had BCP plans. We've always had, you know, people going to the other location to work. I think for the first time we had a situation where both the locations had some constraints, right? So you were basically forced to shut down not only your primary location, also your secondary location, or you sent some people out there. This is the first time. And if you ask me, Adam, uh, 4 months ago, if you came to me and say, hey, Rajiv, in your business unit, can you send 98% of your staff back home and basically run your business as usual, hitting all the SLAs as is? And I would basically tell you, no chance in hell. It would never happen. And the amount of change that we managed to accomplish in the first few weeks, right? I would not even say in the last 8 weeks. The first few weeks is where I think the organization comes together. You know, things that we thought were never possible are actually done. So some of it is down to digitization. You know, it's definitely there, right? So the trend for digitization will accelerate because of what happened in the last 3 to 4 months, and there will be new dimensions and margins added to what digitization can give a business model. In financial services, especially, I come from a business to business background, so a lot of our clients are institutions, and we have had conversations around, you know, modifying some channels, digitizing some channels of service. There's always, a pushback from some section saying that now is not the right time because I have something else important going on, and this last few months have basically brought up the operational risk element quite a bit. That you cannot run your BAU if you don't have certain things in place, and digitization is right up there, right? Top 1 or top 2 reasons why people. I see this trend accelerating. I see the priority going way up, right? Not, you know, 1, but probably even, you know, whatever number is greater than 1. And the other interesting piece that I can share is the tools were always available in organizations. It's not that we did not have access to tools. I think the usage of tools has gone up. You know, either collaborative tools, you know, internal office chat software, soft phones, all of those things, right? I think the usage has nearly not gone up by 10-15%, right? It's doubled or tripled, and that is a good sign, right? So when you come out of it, it's very hard to go back to what it was before. So you will settle at an equilibrium, which is at least 50 to 60% more digitized than before. And it is amazing to see that we have seen that changes in the 4 months. And if you ask me again, pre-crisis, what time would we take to be there? Given the existing tools, I would say maybe 18 months. And it's largely client driven as well, right? So it's not just one organization trying to do. We were, the aim was to sort of deliver services without causing any disruption and doing the necessary things to get there. So all of this meant that you adopted to changes quite quickly, use the existing tools, shared best practices with your clients, helped where possible, like things like desktops in the cloud, right? So that was always available. VDI, virtual desktop infrastructure, was always available, but then you tended to adopt these kind of tools a bit more than usual. I helped about 70 or 80 users getting migrated to VDI in a span of weeks. So the trend for digitization will definitely accelerate. Business models will change. Digital channels of service delivery will become probably even more important. And at the same time, there would be trade-offs, right? You should be a lot more cognizant of the security risks that come through when you're adopting a lot more digital channels, and cybersecurity becomes, it was already a very important thing. Now you'll have to put an additional lens on the new practices that we have come through. But overall, I would say that if there are any silver linings of this crisis, Adam, increased digitalization, and digitization will definitely be one of the top ones.
Definitely. I definitely will come on to the issue of cloud and security later on, but I want to go to Mel. I mean, as a central banker and regulator, does hearing things like 98% of a bank's workforce working from home give you sleepless nights? Is this a concern for central banks?
It is a concern, but actually we have increased also our surveillance. So we know that the institutions that we are supervising are implementing the right security. I mean, because it has become perimeterless, right? So it should be accompanied, as I mentioned, it should be accompanied by proper security tools, practices, I mentioned about VPN, about data leak protection. Yeah, so all of these solutions, I mean, the institutions that we supervise are quite diligent when it comes to adopting this solution.
So Adam, that's what I was telling, to add to Mel's point. Right? The tools were already available, and I think there's been a lot of proactive reach out to the regulators as well in terms of getting the requisite approvals to sort of shift the location of work elsewhere. And there's been a lot of interaction, collaboration, even with the regulators, because what has come out on top is the safety and security of the employees, right? So that always comes in at the top, and to achieve that, if we had to do certain things, I think we reached out to the regulators. Some business units 98%, some business units 90%, 88%, but overall, the significant amount of workforce did work from home during the last 3 to 4 months.
Yeah, Lawrence, we've been hearing a lot about tools and solutions that have been there for many years, and this has obviously been an excellent opportunity to develop and also implement, but also fine-tune some of those. Perhaps you could share some of the experiences as obviously a solutions and tools provider you've had from the financial services sector over the past few months as well.
Adam, thanks for the question, and maybe just to step back just for a minute and provide a little bit of context of where we are with cloud adoption, specifically in financial services globally as well as in Asia Pacific. If you look at financial services customers, and that's across insurance and banks and capital markets and payments, and you look at every size of financial institutions, right, from the startups, the fintech of the world, to the very large enterprise, pretty much they are running every imaginable use cases right now on Amazon Web Services, or what we call for short AWS, so on the cloud. And these applications, and we've heard already a couple of those applications, from the previous speakers, but these applications range from front-end applications, mobile apps, and web portals and chatbots and call centers, to some of the back-end systems of the more sensitive and complex back-end systems, so core systems such as core banking, core insurance, loan origination systems, and so forth. And we've seen in Asia specifically organizations such as National Australia Bank and HDFC, actually HSBC talked about it as well, Standard Chartered or KB, as well as some of the smaller organizations, the fintech like Credit Via, Zerodha, or HDFC Life, share how they are transforming and innovating on the cloud. And essentially, they are leveraging, to your point, this large set of portfolio of offerings. We have over 175 tools right now on the platform, and they're essentially picking the right tool for the right job. And these tools span across a lot of different things, compute and storage and database and networking and security, which are more like the foundational infrastructure tooling, as well as some of the more advanced capability like machine learning, artificial intelligence, or IoT. Now, specifically during COVID, what we've seen is financial services organizations that have already started their cloud journey prior to COVID are continuing to do this and are continuing to launching new services. They're continuing to modernize their legacy applications. So great two examples. I'm based in Singapore. Matchmove just launched a service for e-remittance for foreign workers. This is very timely. They were able to launch that very fast. They were very agile. Now, if you look at Hong Kong, which is a little bit further away, WeLab, and they got their virtual banking license last year. They launched their service in the middle of COVID. So it hasn't stopped those organizations from continuing their adoption of the cloud and from continuing to innovate and transform. Now, if you look at the financial services organizations that haven't started their journey, they felt because of COVID a huge sense of urgency. And to go back to Rajiv's point, and you know, the other guys around, they need to digitalize, right? And so they felt that sense of urgency of just getting going on their cloud journey, and they've been reaching out for help. Now, you know, in the context of COVID specifically, and especially in the context of, you know, different ways of working, what we've seen is a number of specific applications, the use cases that have been very top of mind for our customers. And they range from a number of the applications that I've heard so far, you know, from remote work capabilities, whether it's remote desktop, Reggie, you mentioned VDI, or collaboration and communication tools, as well as, you know, tools that allow, you know, more digital ways to engage. So, you know, just to mention two, for example, contact centers, as well as chatbots that were mentioned earlier as well. And then also, you know, use cases, applications around how to deal with the current situation. So, you know, volatility on the market, credit, lots of risk related to that. How do I do a lot more intensive risk analytics? And what are the compute and the storage and the analytics that I need to achieve just that? So we've seen a lot of focus on this kind of use cases. And if I was going to take just maybe a couple of examples around that to, you know, put that in more color, and we've heard that from Rajiv experience at HSBC, but essentially in a matter of days, a week, the financial services organization had to shift their workforce at scale to, you know, in remote work environment and in a secure way. We're talking about financial services. And, you know, we all know, and I've heard it as well before, end user devices presents a challenge and exposure in terms of, you know, potential risk, as well as, you know, vulnerability, frankly. And so here, on top of that, a number of the financial services organizations realized that they were not ready with their existing on-prem infrastructure and tooling to be able to provide those remote desktops, for example, at scale to their entire employee workforce. And so that's where we've seen a number of financial organizations launch what we call secure desktop as a service services. And there is a tool called Amazon Workspaces that achieve just that, but launch that to their employees in a matter of days or, you know, a week. Two great examples, Sony Bank in Japan has been public about this, as well as RBL Bank, for example, in India. So that's just one example. A second great example is, and I've heard that as well, is how do you engage your customers? So especially when you are closing all of your bank branches, and for example, on the insurance side, you know, your insurance agents are not able to communicate face-to-face with their different, you know, customers. And by the way, everyone is asking all sort of questions to their financial institutions around what's happening with COVID, how am I going to be covered, you know, and all sort of things. How do I access my money? And so what we've seen is a number of customers have launched or increased their capacity for their contact centers on the cloud. Similarly, there is another service called Amazon Connect for omni-channel cloud center on the cloud. And it's used actually by our Amazon retail business. But we've seen also globally systematically important banks as well as insurers either augment their capacity or launch those services. If I look closer in the region, in Australia, for example, Cbus, which is a super fund, were using that service for their internal you know, employees, and they launched that to their external employees in just 3 days. Or Quick, for example, which is a market data provider in Japan, actually launched the Amazon Connect service in a matter of just 3 weeks. And with that, what they've done as well is to help their staff cope with the high volume of calls and inquiries, they've augmented those call centers with web chatbot and voice conversational agents to be able, for example, to answer some of the FAQs around COVID questions, right? So to offload some of the staff with all of the calls that they were getting. Maybe the last example I'll share, because it happened very recently, is Slack. And I don't know if you guys are all familiar with Slack, but Slack is a business communication platform. We announced a partnership with Slack to essentially help customers with enhanced enterprise workforce collaboration, because obviously in a domain where everybody's spread out physically and we're not meeting at the water cooler anymore, there is even more a sense of needs to collaborate in many different ways. And so what Slack is doing is they are migrating their calls capability, for example, on a platform that's called Amazon Chime. That's our video conferencing and online meeting tool. So that's one way of integrating those two platforms. And at the same time, the other piece that we're working on with them is better, tighter integration between our two platforms to allow, for example, the very large community of developers that are using Slack to be able, through their Slack environment, better control and manage their AWS services. And there are a couple more things that we're working on with those guys. So that's just a couple of examples that we've seen specifically in the context of COVID and use of those technologies.
Well, thank you, Lauren. It's very good. There's obviously examples also from other financial services institutions like the big asset owners and the pension funds you mentioned. And of course, it's an issue they're dealing with, not just the banks and asset managers as well. And maybe, as is at this point, we get to get your thoughts on the supervisory implications of cloud and also fintech more broadly, especially within the jurisdictions that CSEN covers. Perhaps you could also cover off some of the micro and macro financial supervisory vulnerabilities of cloud, AI, and machine learning technologies.
Yeah, sure. Thanks, Ed. So, obviously, look, in the kind of current environment with COVID-19, we've already seen, many stores are not accepting cash. So a greater move to online wallets and so on, and online shopping. So it's a boost for platforms like, in this region, Grab, Lazada, Shopee, along with their associated wallets. So in terms of kind of from a supervisory perspective and from the central bank outlook, what is the actual risk management around these kind of wallets? How are they treating their customers? What happens when they lend money? Because now a lot of them are moving to that, and when they're selling insurance products. So there's a lot of questions around how supervisors should be adapting to that. At the same time, we've also seen a lot of pressure from platforms like Libra and AntPay and so on, which is forcing the debate with central banks to think about issuing their own digital currencies. And indeed, this is already happening in places like China and South Korea. So this may also affect, the role of the traditional banking model to the benefit of the newer fintechs and emerging digital banks and so on. And then thirdly, cryptocurrencies are now, maintaining their popularity, particularly as central banks are issuing the market with money and effectively devaluing their currencies in the longer run. So this is all happening in the background. But I would say, coming back to a lot of what's been happening already, using artificial intelligence and machine learning, I think banks were already implementing quite a lot of this. So on the RegTech side, they're using these technologies by automating a lot of the kind of macroprudential analysis and the data quality assurance. We've had there's a lot of new reporting requirements across jurisdictions, and so this technology has been used to sift through the volume of data that's being received, and kind of examine some of these issues. So the machine learning can help improve the data quality by identifying anomalies and so on, and flag them up for further review. At the same time, this is also being used by supervisors, and it's across the different regions. So a number of them are using natural language processing tools to help them kind of detect and measure, anticipate market volatility, liquidity risks, financial stress, house prices, unemployment, and so on and so forth. Even things like looking at Twitter posts and seeing what's coming up about a particular bank, which can indicate whether that trust in that bank is at risk or so on, or a wider financial stability issue. As these things are already being used. And it's also helping with monetary policy for a lot of the central banks. They're using the artificial intelligence to kind of look at these things and study a lot of the big data that's now coming out and across on unemployment, GDP, and so on. The other big area for artificial intelligence is, of course, around AML detection. So the banks themselves are implementing this to help identify customers, particularly on a digital platform. But we're also seeing regulators using this to identify particular extracts or interest from a lot of the documents that is being posted as part of the regulatory returns and other public statements. In this region, for example, the Monetary Authority of Singapore is looking at AI and machine learning to analyze suspicious transactions and identify those that need further attention. Now, of course, the problem with this is there's always a lot of false flags as well. So machine learning is increasingly being used to kind of identify, well, why was that a false flag, and try and improve the system as we go along. And then just a couple more things on the microfinancial analysis side. This is kind of giving a number of regulatory considerations. So, for example, in Europe we have MiFID II, and that's developing and requiring a lot of firms that use algorithmic models based on AI and machine learning to have a robust development process in place. So increasingly, I think even in this region, this will be key things that supervisors look at, is how is those models built, and how we're going to avoid market abuse and potentially causing disorderly market behavior. So for banks increasingly will need to demonstrate how these what's the theoretical construction and the behavioral characteristics and assumptions going into these models. And then on the kind of the more macro side, as we have more of these AI and machine learning technologies coming out, there could be the emergence of a relatively small number of advanced third-party providers that are providing this technology, and so access to that big data could become a source of systemic importance, especially if those firms can limit access to that data and so on. And it may be that only the largest companies can afford to use that data. So these are kind of a number of the issues that are coming up, and potentially vulnerabilities coming up with we've seen the algorithmic trading and how it kind of just suddenly flows and can create sudden sell-offs and so on. So there's increasing focus around that, and then we have all the issues of the data, who owns the data, who controls it, who can access to it, and so on. So I'll just stop there. I think I have a little bit more to say, I think, about the predictions for what banking supervision will look like in the next few years, because I think there will be some changes, but perhaps you can come back to that a bit later.
Yeah, let's come back to that. No, thanks, Reza. There's certainly concerns about third-party risk, given this increasing reliance on a network of service providers, as you rightly said. And it's certainly an issue that a lot of financial service firms are having to deal with in keeping and responding to the fast-moving regulatory changes that are coming out as well. Mel, I just want to come back to you. I mean, long-term, the region and certainly certain countries face very unique issues in its financial services landscape. There's certainly countries which have very low levels of bank population and card penetration. I mean, from your point of view, I mean, the Philippines probably has done a lot in the area of promoting financial inclusion, but what role does cloud technology have in promoting financial inclusion? And perhaps you can share some of the experiences you had with one of your domestic banks, Cantalan Bank, where I believe they were the first financial institution in the Philippines to fully leverage cloud computing technology.
Yeah. Yes, Adam. The BSP has always supported responsible use of cloud technology. In fact, we had pronouncement as early as 2013. And personally, I think the first step towards digital transformation is really to embrace cloud technology for greater agility, efficiency, and especially, of course, for those institutions that don't have much resources. And speaking of Cantilan Bank, although there are a lot of publicly available resources citing how impactful cloud has been to Cantilan Bank, not only to Cantilan Bank and other rural banks in the Philippines whom we consider as early adopters of cloud. Of course, aside from huge cost savings, other obvious benefits include enhanced market reach, relevance, scale, improve responsiveness, customer needs, enhanced, multi-channel capability, and of course, better risk management system. So, and in terms of policy recommendation, I think based on our experience so far, and in terms of, let's say, dealing with banks, dealing with cloud service providers, the likes of Amazon and AWS, really the benefits of cloud far outweigh any associated risk. In fact, personally, I think cloud has never been more significant than how it is or what it is today. So in terms of the approach, our regulatory approach has always revolved around openness, flexibility, but with caution and prudence. So you may have issues about data privacy, cybersecurity, but with the right processes, right tools, this can be successfully managed and the risk can be, mitigated. You may have issue about data sovereignty, but of course, in this day and age, security and privacy is no longer it's no longer a function of location. So in short, personally, in fact, in the BSP as well, we have some cloud. We are embarking on our cloud roadmap as well. So in short, we can leverage on cloud, and we can allow our supervised entities to reap the benefits of cloud technology without compromising consumer protection, without compromising cybersecurity, or even financial stability.
Thank you, Mel. Yeah, this actually follows on from an interesting roundtable we had yesterday with the MAS on the implications for greater uses of cloud as well, and how regulators are becoming comfortable with other financial services firms implementing more cloud technology. So it's definitely a trend we're going to see continuing for the foreseeable future. Now, going back to both Lawrence and Rajiv and talking about trends, I want to ask if both of you, perhaps Lawrence first, if you could expand a little bit more about the remote working, perhaps the areas around going digital. Are you seeing a trend in rethinking about digital channels, maybe a greater focus on disaster recovery and operational resilience? What's next, and how will it look in the next 5 years?
Thanks, Andrew. So maybe let me just start with the operational resiliency. I think that's top of mind for everybody, especially in this context. The way we look at operational resilience, it's the ability to provide continuous service through people, process, and technology, and that despite of disruption. And obviously, with pandemic happening right now, we are facing a disruption that I don't think a lot of us predicted. Now, the way it works at AWS is when you operate on the cloud, we have this notion of a shared responsibility model. And essentially what it means is that AWS is responsible to manage and controls the component from, and I'm going to get maybe a little bit technical here, so bear with me for a second, but from the hosting operating systems and the virtualization layer down to the physical security of the facilities where the services are hosted. That's where we're responsible, and we're responsible for ensuring that the services that we offer to our customers are essentially continuously available, and that we can essentially are prepared to handle a wide range of events such as the one we are experiencing right now. Now, the AWS customers are responsible to design and build secure applications in a manner, of course, that meets the regulatory and the compliance obligation, to Melchior's point earlier. And also to achieve the availability and the resiliency they need. And what we offer is services that help them achieve different requirements, depending on jurisdictions, depending on specific regulators, or depending on their own specific security posture, as well as internal compliance guidelines, as well as their targets in terms of resiliency and availability, because different applications would have different requirements. Now, to help our customers, what we do is we provide a range of best practices, because we've been working on this for 14 years now. That's when we launched the service. We have also a number of security tools. We have a number of guidance, as well as experts. We have, for example, security solution architect and compliance specialists. We have what we call professional services teams that can help and engage our customers, as well as a very large network of partners that again can help customers achieve those requirements. And essentially all those different people are helping our customers build those secure applications that we talked about, making sure they are highly performant, that they're resilient, and they have an efficient infrastructure for those applications. Maybe one tool that I'll mention is what's called a Well Architect Framework. By the way, it's a free tool, it's self-service, but you can get help again from our partners or professional services teams to run what's called a Well Architect workshop. And what that tool does is essentially takes the state of your current applications and essentially look at best practices and validate essentially where you are. And it's looking at a couple of different key dimensions, and especially right now in this environment, we're seeing a number of customers reassessing their architecture of the applications. So it's looking at operational excellence, it's looking at security, it's looking at reliability, it's looking at performance efficiency and cost optimization. And looking across all those dimensions, then you can assess where you are and take whatever measures is necessary. So that's on the operational efficiency side. Maybe to shift back to the other hugely important topic on digital. I think what COVID has really put at the forefront, and Rajiv illustrated that quite a bit, as well as Aziz and Melchior, is the necessity to be agile, to respond quickly to macro events like the pandemic in a digital way. And so while we're seeing organizations, and to your point, maybe we're towards the end of that, but while financial services organizations were adjusting to this new way of operating to ensure business continuity, they are also at the same time assessing how to engage with the customers in more meaningful ways. And pre-COVID, I think Rajiv, you mentioned that as well, right? But pre-COVID, the consumers wanted to manage their everyday life the same way they manage financial services. And so, back then we were still traveling. So the way you were booking your ticket or watching a movie or buying online, you wanted to essentially be able to do the same thing with your financial services live. So the notion of digital transformation is not new and is not due to COVID. COVID is just accelerating the need to do that, because now comes COVID. And frankly, there is not an option anymore. Financial services organizations have to offer all those services via those digital channels. I mentioned a few of them, the contact center of the chatbot, but there are multiple other channels that are being used right now. And there is this sense of urgency, not just to offer these omni-channels, but also to look at how to best offer personalized, contextualized, and seamless experience across all those channels. And so, a great example, and actually it's from a digital bank in South Africa. And they were on a panel recently in Asia, so that's why I'm commenting on them. But essentially, so it's TymeBank, and they launched, about a year ago. And what COVID has done for them, it has accelerated the customer behaviors towards digital. And what they shared on that panel was that, I think it was in the month of April, they saw a growing number of customers signing up online. And by the way, they were the only bank that had that capability. So they were the only bank who had a customer base growing, as well as an increase in terms of deposits. And I think they mentioned 20% of more deposits, as well as 100,000 more customers just in 1 month. And on top of that, back to that customer behavior and what customers are expecting, they were the only bank that month who had a positive net social media customer experience score. So that tells you a lot about the dynamic in that specific country. Now, to go back to a lot of what Aziz covers, especially around, machine learning and analytics and the need to do all those, complex models, providing personalized and contextualized customer experience requires better understanding your customer. And to better understand your customer, you really need to be able to harness the insights out of the data that you have. And financial institutions, frankly, have a lot of data already. They are augmenting those data with third-party, data, social media, and so forth. And Aziz, you covered a lot of points there. The good thing about the cloud now is that it's never been easier to actually collect that data, to store it, to analyze it, and to run all those complex models. And it's much more cost-effective as well, because back then, running machine learning models was extremely expensive in terms of dollar, but as well as in terms of times. And now with the capabilities that are being available, frankly, everyday developers, you don't need to be a data scientist anymore. Everyday developers can develop those models depending on the type of tools. I'm not going to go into the technical details, but essentially there are tools that are now available for people that are not data scientists or experts in machine learning. And so what we've seen is customers are building what we call data lakes. And on top of that are running the analytics and the machine learning models that we were talking about earlier, again, to better understand those customer behaviors and preferences. Plenty of examples across the region. Hong Kong Exchange shared recently how they were building that data lake to build more targeted services for their market data offering. National Australia Bank as well talked about how they were using their data lake to do not only hindsight, which is looking at the past, insight, which is offering analytics and machine learning in real time, as well as foresight, so more looking forward. FWD, HDFC Life, and there are many others. I like the HDFC Life story because they started their cloud journey by building that data lake. They built a recommendation engine on top of it to personalize the customer journey and essentially suggest next best offer to their customers, to their agents. And again, all of this available, online and through digital channels. Maybe the last point I mentioned around the digital bit and the personalization is, because I remember a lot of financial institutions in Asia Pacific asking specifically for this, they kept saying, we want to be the Amazon of financial services. And part of what they meant here was they wanted to be able to provide the recommendation that you get when you have that experience on the e-commerce Amazon website, the recommendation engine. What we did is we actually packaged that recommendation engine as a service. It's called Amazon Personalized. And you can now use it and essentially create your own personalization. And again, you don't need to be a technology geek. We have simplified those models so that you can build all those personalized experiences.
Thank you, Anne. Rajiv, do you want to add anything to that? I mean, one thought that comes to mind is, do you think 5 years down the line, we're going to see banks having boards full of tech-savvy directors rather than traditional sort of banking types?
Yeah, so I think there's a couple of things, right? I'll probably pick the human angle of how things could change in 5 years, right? Definitely everything we do will increasingly be digitized, right? So that means that the outcome of increased digitization is all of the data is more consumed, can be readily consumed by machines. And that primarily means you can apply AI, machine learning, and actually iterate and improve that experience, right? So that's an outcome of increased digitization. All the output comes from that interaction, even the way you speak. Maybe they'll record your voice and they'll be able to predict whether on the tone of how you're speaking, they can predict whether this customer is going to sort of buy the product or not, right? That's, a lot more sophistication is going to come through as we increase digitization in our interactions, right? But from a resiliency perspective, a lot of organizations, including, I think, regulators, have sort of realized the importance of responsiveness in resiliency, right? So how quickly can you turn around, right? Not the fact that you can turn around, but what are the tools and what are the techniques or what are the best practices you have to respond, and how quickly can that response be? And that there's going to be some amount of premium placed around responsiveness, and from there, I think you'll sort of come into operational resiliency, right? So there's no point in having a resilient operational plan if that cannot be responsive. So how quickly can you basically switch it on? And it has to be done at scale. right? It's not about one location or the other location going down and you quickly rearranging some boxes, right? So it's about responsiveness at scale, and how can you use tools like cloud and every other possible tool at your disposal to do that. I also think that one of the other things when it comes to work from everywhere or perimeter-less working is, we have all built some social capital to this point. And when we all had to switch back to working from home, we were actually spending that social capital to be able to get things done. If you actually project the same behavior into the future and you sort of onboard new talent into the banks, how will they build social capital? Will that come through interactions like this, or what else needs to be done? I mean, this is something I think the human resources and people experience teams in the companies will start to think about. And now that they got everyone working, this is around how do you sort of inculcate the culture, build the social capital in the organizations. How do you establish rapport with your clients, and what will it mean for innovation in organizations, right? And I think, Lawrence, you can sort of, you have these two pizza teams, and a lot of that, camaraderie and innovation comes from interacting with each other on site. Will it be the same if you sort of bring a two pizza team virtually? Will the output be same? I doubt it, right? So there needs to be a balance of physical and virtual interaction. So I think we are going all the way from physical interaction to complete virtual interaction, but I think like everything else, we are going to find a balance somewhere in between. So that would be another thing. I don't think innovative work can purely happen 100% virtual. There will be people who will challenge me, but we'll have to adjust definitely. But the amount of physical interaction is definitely required. One other thing I think is video is going to become the new normal. Pre-COVID, voice was the normal thing, right? You called people and you interacted with your clients on people, but video is going to become the new normal. Zoom is the Skype of this age, right? So a lot of us, when we started off in the early 2000s, we were very happy to have voice over IP, not paying hundreds of dollars to call international. Now Zoom is the new Skype. And how voice over IP has evolved, right? How many more applications have come through? You don't even think that I can call on WhatsApp and that's a cool thing, right? That's just given. So I look at innovation now. What new applications can be built on default video, right? What services can be delivered on default video? Telemedicine comes to, some obvious choices are telemedicine, financial advice, all of that things. But I'm sure, I have not thought about everything else. But if video is the new normal, then what more cool services can a bank design? And how can you sort of, and you can also present very well your story and narrative and everything else. Videos can be actually intimate as well, right? So you can sort of run through. But I do think that video is going to become the new normal in the service delivery. From a BAU service delivery to high-end consulting, I think everything can be done through some amount of video interaction. So a final thing I also think is that as we come together, it's always difficult. We tend to overestimate that things will change much more in the short run and much less in the long run, right? I think it's a Bill Gates quote that says that we tend to overestimate the impact of technology in the short run and underestimate in the long run. I do think we'll expect miracles to happen post-COVID. There will be some amount of disappointment, I'm sure, that we are not able to stick to what has happened, and maybe some commentators and pundits will come and say that we let go of a golden opportunity to change things. But I think we'll quickly revert back to a bit more normal. At least in terms of behavior, there will be some kind of V-shaped recovery. But in the long run, I think things will change for better. We will start to use better tools. And you also have a lot of software engineers, product people stuck at home. And they are probably nitpicking on all the things that are causing friction in this experience. And from that experiences, I think you'll get better tools. And I'm sure there are like, n number of ideas that are actually mushrooming in people who are sitting at home and saying, why doesn't it work better? And, that means there is a possibility of more innovation coming through. With more innovation, there will be challenges for regulators. How do you regulate these new things? How do we adopt these things? It's an exciting period on the other side of this crisis. But I think some things like video will definitely have a significant impact on how we interact. So video will be the new normal. I'm very optimistic that things like Zoom will become the layer of next gen applications, right? They become a fundamental infrastructure, and you can build on top of those things. That in some ways it excites me. In some ways I'm a little skeptical that a lot of things will change, because people also yearn for what they have experienced in the past. So there will be some kind of quick turn back to default. But net, I think we will all learn to be a more resilient as people as well. I think resilient behavior will be a lot more appreciated. Responsiveness, eagerness to sort of work with other people, all the positive things will last in the workplace, for a significant time. It's been an unmitigated external shock, but I think a lot of positives come out of this.
Sure, Matt, thank you. I don't think there's anything wrong with a healthy dose of skepticism as well. So maybe we can go back to Aziz as we're looking about the future and what the future may hold. I mean, what's the supervisory way forward? Perhaps you could share a bit more on the future of central banking and supervision, and what could be the key challenges therein as well.
Yeah, sure. I think there are going to be big changes, and I certainly, agree with a lot of what Rajiv is saying in terms of the technology, and even coming back to some of Lawrence's points around that technology. I was actually following the UAE, and if you look at them, even before COVID, they were very strong followers of moving into these new technologies, moving into cloud, even providing a lot of government services using, these various platforms. And of course, the COVID has really shown that these things were resilient. They worked. They allowed people to be at home and access everything quite well. And a lot of central banks and regulators have, until quite recently, been a bit frightened of really embracing a lot of these new options, saying we can take Amazon Cloud, but other platforms as well, and saying, well, how can we be sure this is secure, and so on and so on. But I think the COVID-19 has been a real life case study to say, well, actually, it really has a lot of positives there, and we need to be looking at this in another framework rather than just as we did before. So I think we can probably look at this in two ways. Firstly, as the collaboration with traditional banks becomes more common, it raises questions for supervisors and regulators around whether fintech companies themselves should require a license to engage in banking business, especially as they come into offering those lending products and insurance and so on, either directly or indirectly. I think probably it's a bit too soon to force it at the moment, because they are still just in certain parts of the financial services system. But I think it's definitely going to be prudent to put a kind of monitoring mechanism in place to kind of facilitate a quick supervisory adjustment as there are noticeable changes. The other issue I talked about earlier is all this data that's now available, and then we therefore have the question of data misuse and how it's being guarded and so on, and where it's kept. And this kind of goes hand in hand with the risk of a non-transparent credit scoring method, the kind of black box effect, where a lot of the new technologies are looking at Facebook posts and other social media posting to make a decision on people, and using artificial intelligence without the customer really knowing that. So how do we kind of control that and make sure that equitable decisions are coming as a result of that? And then again, if outsourcing is going to lead to a situation where activities such as cloud computing, for example, end up being offered by just a handful of players, then we have severe operational risk implications for the whole banking sector. So if any one of these players get into trouble, a huge number of banks could suddenly be impacted, resulting in a systemic crisis. So these are some of the background issues. And so the second area I'd be looking at is what's going to be the future of supervision. And as you were asking, how are things going to change? So I think firstly, we're seeing the industries becoming more modular. with many firms competing in small parts of the value chain rather than the traditional big banks controlling everything. So I think supervisors will increasingly need to attend to activities, for example, such as payments or credit provision, alongside the traditional focus on entities. So you may be a banking supervisor now, but in the future you may look at a whole area or a series of areas rather than just a particular bank. And that again raises the question of whether do supervisors' remits need to be reassessed in light of a kind of continually shifting regulatory perimeter. So that's one thing. Secondly, I think
maybe just on that, there's an obvious question really. I mean, how should service providers be viewed? I mean, should they be considered as systematically important parts of market infrastructure?
Yeah, so I think it kind of depends exactly on what they're providing and who it is. And as I was saying, right now, there's a lot of smaller players providing certain technologies and products, and so it'd probably be difficult to kind of bring them completely in. But then we have the larger players as well, and Lawrence, you may want to comment on this, but who are increasingly going to be playing a bigger role. And so I think at the moment it's probably not there yet, but at some point the regulatory perimeter will need to be expanded, because if I'm a supervisor and the bank I'm looking after has all of its systems, databases, and so on a cloud platform, then I want to make sure that the bank understands the risks and so on around it. But I will probably also want to go to that cloud provider and look at how they're placed and what their security infrastructure and so on is. So I think that's going to be definitely coming up on the horizon. There'll be more interaction on that level.
Thank you. Lawrence, would you like to add anything to that?
Maybe what I would say is it's actually, it's interesting because I would say a couple of years back, customers were asking us, is the cloud secure, right? And we had a lot of discussions around that. And nowadays, the questions they're asking us is two things. Can you help us migrate the most critical system onto the cloud? Because we know that's where we're going to be more secure than what we can achieve on premises. And second, how do we achieve continuous compliance? And I would go back to some of the point that Melchior made on the regulators themselves are realizing that the cloud is going to help their regulated entity to be more secure, but also that there are now ways to automate some of the supervisory and regulation function, like regulatory reporting. You mentioned the API program, Melchior, that you were working on. We're seeing a number of customers, National Australia Bank or Macquarie, for example, or Capital One, have been very public about how they are working on their continuous compliance and providing that ability to monitor at all time, what's happening and be able to react based on the event they are seeing. So I would say that we're seeing a shift. Obviously there are our customers are always looking for different options, and we're always here to support them with their different options. And that's why, back to my point around, for example, operational resiliency and security, we have all those multiple options that we can work with them in terms of achieving the level of security posture, the level of resiliency, the level of availability that they want to achieve, depending on the applications that they are looking at porting on the cloud. Now, we are expecting that over time, and we're probably talking about quite some time, but over time we're expecting that the majority actually of those players and enterprise, not just in financial services, will be running on the cloud and will be leveraging all those capabilities. When it comes to security specifically, we offer a large set of tools and functionality that are available. Whether it's about encryption, whether it's about access control, whether it's about monitoring and so forth, as well as we have a very large set of partners that offer those functionality and features. So again, the customers can pick and choose whatever tooling works for them the best, depending on what they are trying to achieve.
I know we do always come back to this issue of trust, and I know Aziz has heard me talk about it before, and it's something we at OnFIF are tracking very closely the issue of trust in technology, and this has started with some of the work we've done, which is geared towards digital currencies, but there's lots of other, obviously, technology platforms that are coming into our world of central banking that need to be analysed as well. Now, I have been bringing in some of the questions we're receiving from the audience into our discussion, but there are a couple of direct questions for Mel that we have as well. One of our listeners, Mel, would like for you to expand a bit more on RegTech and SoupTech and the BSP's experience with that. And then also, Mel, a second question we have for you is whether you're able to provide any more details about the blockchain-based solution you mentioned at the beginning of the conversation.
Yeah, so I mentioned about the use of RegTech, SoupTech solutions to be able to effectively fulfill our mandate. API reporting system essentially is because the way we do previously, we're doing it via email. So reports are submitted to us via email. But right now, we have been piloting the use of API, so that with the use of API, supervised entities can directly send to us, prudential reports. So aside from that, we are also, I mentioned about chatbots, so that we can an AI supported chatbot, so that that would facilitate interaction between the BSP and the consumers, financial consumers who may have concerns, who may have questions, or who may have encountered certain difficulties with their institutions or with their banks. The next question, I think, is on the blockchain analysis solution. Yeah, because since 2017, we have issued regulation requiring virtual currency exchanges to register in the Philippines. So they are considered as a money service in the Philippines. So essentially, there are also, and for that, we cannot, in terms of surveillance, we cannot rely on traditional approach of supervising and or monitoring the activities of these virtual currency exchanges. That's why we are talking to different vendors right now that can possibly help us in terms of, let's say, probably strengthening our surveillance capability in terms of, let's say, investigation, ensuring that these BCEs are complying with our rules, with particularly AML rules. So all of this. And I think we are also discussing on the possibility of, it's in the pipeline right now, and we're going to, hopefully we can launch this year. So it's, we're talking also to different vendors of GRC solution. So that would also help us, particularly for cybersecurity. I mentioned about a lot of us, in fact, 75% of my staff are working from home right now. So and given the importance of ensuring the cyber resilience of our financial services industry, we also need to step up. That's why the process of performing cyber-related examination, investigation, reporting, profiling, incident reporting, self-assessment will be done through a centralized SoupTech solution. Again, I mentioned this is also in the pipeline. So how does supervision look like in this new economy? So supervision will be supported a lot by technology. It's really technology that will drive supervision. I hope I was able to answer the two questions.
Yes, I think you did. Thank you very much. Now, I know we're coming up to the end of our time, and I think you've answered most of the questions we've received so far from our attendees. There is one area that I did want to touch upon that we haven't yet, and that's how all of this is going to impact talent, but also diversity in financial services. I mentioned at the beginning. Now, we know, of course, that many of the countries that are led by women have dealt with the crisis very well, but there still seems to be a lack of female leadership, both in the private and public spheres of financial services. Do you think this could be a time where this all changes? Perhaps, Aziz, you may want to offer your views as you have a good handle on all the regional central banks.
No, I mean, I think, definitely, as you say, we saw kind of the leadership in New Zealand, and you compare it to what's happening in the UK, for example, or the US, and complete shambles in those two countries. So there is definitely something in that, and I think it's kind of shown that we do need, at the very least, a mixture of leadership, but and the type of people there, so that we don't get into this group thing, which I think that's probably the most dangerous area. But I think more importantly, the other thing it's shown is, certainly from a central banking perspective and a supervisory perspective, is previously central banks would hire streams of mainly economists who do a lot of the policy and the research, and a lot of these would flow into the kind of supervisory roles. And as I think we've heard during this discussion from the speakers today, we actually need a very different skill set now. We need people who understand banking models, payment systems, but also these new technologies. We need data analysts, we need programmers, we need people who are comfortable with these things, because because essentially the supervisory role will mean going into these firms and really kicking the tires and understanding those products and technologies, and we can't just rely on having reports saying it's secure and third parties confirming that. We need to be able to understand it ourselves. So I think that there is going to be a big change from that element coming in, apart from the more obvious mix of different leaders that I think are useful.
Okay. And Rajiv, from a private sector perspective, do you see it impacting diversity and diversity within the workplace?
Yes, definitely, right. I think the private sector has experienced how much can be done remotely, and part of people dropping off the workforce was that the necessity, right? You were either a primary caregiver, or you had to stay and support the family, and hence you had to actually get out of the workforce for a period of time. But now this experience definitely has taught us that a large portion of the roles can be performed from anywhere, right? So within the jurisdiction, so you can be a lot more flexible, right? So workforce can be a lot more flexible, employers can be a lot more flexible. That also means that you're now going to give opportunities to the parts of the workforce that you thought has to come to the office for sure. That automatically increases the amount of talent you have access to, and that should naturally give rise to a more diverse workforce. You will no longer, I think, insist that certain roles can only be performed from office. There will be a lot more flexibility built into how you work, and that should bring in people who themselves thought that they cannot be part of the mainstream. They were looking at part-time. So that kind of introduction of flexibility increases the possibility of having a lot more diverse workforce. The second thing is, probably you could split some roles and give a lot more flexibility as well, right? So some roles can only work for certain part in the day from remotely, and then they can actually log off, and you can sort of bring on someone else who is working remotely. So that's another possibility that I look for. But overall, the notion of flexibility will go a huge change. That should work both ways. Employers should have better access to the talent pool, and the talent pool will have better access to a large amount of employers who will be showing more flexibility in the way they want to engage their workforce. I think it's a positive for both sides, and I think definitely again, tools and techniques coming, the newer tools will make it easier to, I think, collaborate remotely, which will also increase flexibility that is available for us to engage. And the good thing that we have seen in HSBC is you start off not from saying 20% work from home, 80% back to the office. You sort of start to ask, saying that why can't 60% or 55% of my workforce work from anywhere they choose? right? Not from work from home or work from office, but anywhere you choose, as long as we give them the tools to perform their jobs effectively. And that in itself is, I think, a big step up from where we were pre-COVID. Added flexibility should only increase more opportunities to engage a diverse workforce.
Thank you, Reggie. Lawrence, would you like to add anything to that?
There's been a lot that's been covered, but at least my personal experiences, it's been interesting because I've been in the industry in technology and most of my career in financial services, which have been historically known for two specific domains that haven't been very diverse, at least in terms of gender diversity. And what I can tell you is actually it's been increasing. So that's more anecdotal, obviously, than anything else. But there are plenty of statistics out there. So I think it's happening. I think what's happening as well that we've seen at our customers is, to some of the point that both Aziz and Rajiv mentioned, is there is a need for new talents. Especially in technology, there is a need for people that understand and practice and have expertise in technology. And so what we've seen there is, first of all, we used to see banks hiring only people that are coming from the banks. And now we're seeing a lot more diversity in terms of where banks or insurers are sourcing their talent from. They are sourcing talent from all sorts of industries. They are sourcing talents that have actually experience in digital transformation, but maybe not in banking. So that's one aspect. The other aspect is, and that comes with diversity, is all of the things that are happening around education, and education, especially in technology. There are a lot of initiative around educating the young new generation on all those new technologies, and at scale and across a much diverse set of people. There are obviously a lot more technologies available to learn about technologies as well. And I think that's going to help in terms of increasing, the diversity across, gender and races and, religions and so forth, to span across multiple domains. So I think there are a couple of different things that are happening right now that are helping, this to get to a more diverse place.
Thank you. Yeah, Mel, I'm not sure if you have anything to comment, but I mean, obviously, the role of central banks is something that's changing very fast, and as we've heard from Aziz and others, there's going to be an increasing number of different types of talents that central banks need. They're behavioral scientists or data scientists. Of course, I presume the BSP is taking this trajectory as well.
Yeah, in fact, we are continuously hiring people with specific skills on cybersecurity. We just recently onboarded some 2 data scientists and a blockchain professional. So we also recognize that we need to build our capacity as well, because we cannot regulate what we don't understand. So we really need to build our capacity. Aside from, of course, investing in technology, we really need to hire the appropriate skills to help us, effectively supervise or regulate the financial system.
Very good. Well, thank you. I think that brings us to a very nice conclusion, and it's been a very interesting discussion. So thank you to Aziz, Lawrence, Mel, and Rajiv for your time and contributions throughout. I also want to thank all our attendees and listeners for joining us and for giving questions. And I do hope you can join us for a forthcoming session we do as well. So that is really it from me. I'd like to say goodbye. Please stay safe wherever you are, and I do hope you enjoyed this virtual panel. Thank you.